Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Well, good day, everyone. It's Liam Garman, Managing Editor of Real Estate here at Momentum Media, the team that brings you the Smart Property Investment Show. And I'm joined, as always, by my co-host, Emilie, Lauer, discussing property investing and investing more broadly with some of Australia's smartest cookies, so you, our listeners, can take a leaf from their book and build and scale your portfolio. And today I'm joined by the one, the only Mossy Taheri, founder and principal at Rising Returns. Mate, welcome to the podcast.
Hey, Mossy.
Man, great to be here, mate. Thank you for the introduction. Yeah.
This is like a long-time listener, first-time caller kind of moment. You started, and you were telling us before the podcast, now this is a great endorsement for SBI, that when you started your journey, you were listening to the SBI show.
I was religiously. I think there was a year, maybe 2017 or 2018. I think I probably listened to all of it. Yeah,
every single one, and we send out a lot.
Yeah.
We do a lot, but that's the goal, which is speaking to experts, speaking to people that have done it, so you can get those nuggets, so our investors can scale. Now, tell us a little bit about your background. You moved to Australia in 2015, and this is the hook of our podcast today. You had $5,000 to your name, and from that, in just a decade, you've scaled your property portfolio.
That's it. Very interesting story. Yeah, I graduated university. I studied in Malaysia, and then I went back to Iran. I did some work for my dad, which was a renovation project, actually, in Iran. Took me like 6 months to do it. He gave me $5,000. In the meantime, I applied for the Australian graduate visa. Then I moved here with that, with $5,000 cash. Because Iranian banks don't really work anywhere else. So
I can see, yeah.
Cash is king. I came, and then I went and got a room. It was cheap. It was like $200 a week. And just paying the bond, 4 weeks bond and 2 weeks rent, all of a sudden I was like, I'm down to, and some other expenses. I was already
nothing left.
Yeah.
I was already down to like, I think it was less than 3,000, like it was 2,800. And I was like, okay, the money just goes away fast in this country. You can live a whole year some places in the world with $5,000. That's how it started. No job. I didn't know anyone. Got cracking. I got a job as a waiter initially. And moved up from there.
And you were listening to the Smart Property Investment podcast throughout this journey, and you're now working in as a buyer's agent.
Yes.
Talk to us about that and what you do. And I understand that some of your unique offerings that comes from that background, your mathematical background, yes, which is how you kind of set your investment parameters.
Yeah, that's amazing. So I'm an engineer, mechanical engineer. So I'm quite a numbers guy. Even if someone, like if a friend of mine goes to a restaurant and they say it was really good, I always ask them, out of 10, please rate it for me. I want to know the number.
You need to know the scale.
Yeah, because very good could be from a 6 to a 10.
Yeah. But
I want to know, what is it? Is it a 7.5 or the numbers help you understand things better. So having that background, when I started looking to invest, I went deep into the rabbit hole of data and understanding what the data means and how to optimize the decisions. And that journey started in 2016.
So that was quite quick.
Yeah, very quick. My parents did property, and I was always into it.
I think it's we had a talk, you and I, the other day about this. I think the way you've been brought up, and if your parents are into property, you kind of want to replicate the same path. What do you think? Do you think it's because of your upbringing that you really wanted to, invest yourself in property?
Yes. So my parents used to do property, but they made a lot of terrible mistakes.
So you learn from them.
But I learned the power of it because they would always say to me, if we had not sold that property, we would be millionaires now. So they made some good purchases, but then they sold it. And I learned from them that if you buy a good property and you hold it, 20, 30 years later, a lot of really good things will happen. So when I got here, I immediately noticed that I happened to meet a guy who had 7 properties. And I noticed that this was a thing that it's a Australians love property. It's like a sport.
Yeah, it is.
Yeah, I noticed that, and this guy mentored me a little bit, and that ignited my my interest to start looking. Yeah.
So your parents were investing in Iran?
Yes,
you're right. And what's the kind of property culture like over there? I'm guessing they're not as property mad as Aussies.
Probably not as mad as Aussies, but yeah, they love it there as well.
Really?
Yeah.
Really? So you kind of did bring that passion over here. So you had that property madness. You came over here and you could kind of just replicate it in a similar environment. So, I mean, it seems like such a big jump from where you were then to where you are now. You were down to like 2K left in the bank account. You were working as a waiter. What was that? What were the next steps for you finding your first place and scaling up?
Yeah, so the first year was just about surviving, really, and bringing the quality of life to at least average. So it was way below average to begin with. So, and to do that as an engineer was to get an engineering job. It took about a year of figuring out how to find a job, and eventually I got a pretty good job. I landed a really good job in medical equipment. I was in the project management team for a medical equipment company. That gave me a healthy salary, and I started saving while living a normal life as well. So I started saving, and the goal was to buy properties. Yeah.
Let's talk a little bit about your first property. Talk to us about when did you buy your first property? Where was it? And it's a big step to buy the first one.
Yes.
How was the process for you?
Yeah, so it's in Aspley,
Brisbane. Oh, yes. That would have been a great buy.
Really
nice.
Good buy. Really good buy.
Work.
2018, and I probably researched for 6 months. And at the time I was living in Melbourne, actually. And Melbourne was red hot. We're talking, when I told people I bought in Brisbane, it was like, they were so surprised. They thought I'm so stupid. Yeah. Everyone thought I'm stupid. But I just looked at it and I was like, I can buy an apartment. This property was $600K. And it has 6 bedrooms, right? And it was cash flow positive. So if I bought in Melbourne, it would be cash flow negative. And it would have been like a much smaller type house.
Yeah.
But the sentiment was that Melbourne's always going to grow because it had the best run in the past a decade before that. But my idea was I look for freedom, right? And I thought if I lose my job, I have to sell my house if I buy it in Melbourne. And this one was cash flow positive. So I felt comfortable to make this huge decision because I knew that I would still have my freedom. Yeah.
And I think, that Melbourne point of view as well, it is, even though, history might have proven them wrong, it is a very rational thing, which is, I think for a time that, I don't know if it still is, but Melbourne overtook Sydney as the largest city. I think they overtook.
Not anymore.
Not anymore. Yeah. But it's a rational thing that this city will continue to grow. It is an economic hub. So you would expect that there would be more long-term growth there. So it is rational what those people thought. But your strategy was informed by your risk aversion, which is, all of our experts, they say before you start investing in property, you have your strategy, you have your goals in mind. And within that, you have parameters for your risk aversion, which is yourself. You came in with the mindset of, okay, I don't necessarily need that ball and chain liability, which will take $700 out of my pocket every week. I need something which is cash flow positive. But I mean, history's kind of proven that you might be right with that.
Yes. And it's just back to the principles, right? I was able to get 600 square meters of land, a big house. And if it was in in a good location, so that's like 13 Ks north of CBD, in Melbourne, it just wasn't going to be something like that. It was going to be an inferior type property. And the cash flow is quite important as well. So it was an easy choice for me, but everyone thought I was going mad.
Yeah.
Well, you basically had the reinvesting aspect before it became like popular in a way, yeah?
Yes.
Was it easy for you to go to that reinvesting, or you were looking also for property to live in?
I did consider it for a long time. Obviously, the stamp duty exemption is why most people don't want to lose that $20,000-$30,000, to stamp duty if they don't have to. So I thought about it a lot, but the numbers just didn't stack up for me. I just look at numbers. I don't make emotional decisions, and so I was like, I have to just pay this stamp duty. It is what it is.
Oh, I totally agree. I think it was only until recently that the stamp duty exemption in New South Wales was probably up to like 650 something thousand. It had to be like a new bill. So really, like, where are you going to get this? And that's where the numbers add up, because it's like, I can buy a 650K apartment in, not to be rude, but not necessarily a desirable location in Sydney, or I could go into one of the smaller capitals and buy something that might be slightly negatively geared, maybe neutrally geared, maybe if you're really lucky now, positively geared. Those numbers don't stack up to put the owner-occupier cart before the rent-vesting horse. Do you still have that property now?
Yes.
So you've been holding on to it. So
yes.
Are you in your strategy? Do you ever see? And this is where a lot of our guests disagree. In your strategy, are you a hold forever kind of person, or are you the type of investor that you might end up looking at selling asset? Because I could imagine that house now would be worth high nines in the millions, maybe.
It's 1.2, maybe 1.3.
Wow.
I mean, Brisbane is hot market.
Well, I
now,
mean, my wife and I were looking in Aspley 2 or 3 years ago. So, but that goes to show how much it's gone up since even we looked up there, right? Yeah. So, would you ever look to sell that to maybe buy several other places and spread the cash more evenly?
I think it's something I will not say no for sure. At certain point in the portfolio, it could make sense. I'm not there yet. I'm not at that point in the portfolio where I would sell and reallocate funds to other properties. At this point, I'm holding. Yeah.
So let's talk about your portfolio. So you bought that first house in Aspley, but you didn't stop there.
No.
What happened next?
So 1 year later, I was able to go again. 2019, I bought in Brackenridge.
North Brisbane.
North Brisbane. I was a big fan of it. Yeah. I couldn't quite do another one as close. It's a little bit further away. It's about 18 kilometers north. That one was 550. Yeah.
Bloody hell.
Nice.
That's good.
Yeah, very good.
Yeah.
These two were the best ones in my portfolio.
Yeah. So looking at that, a lot of people would look at this and say, you were a new migrant to Australia. You'd only been here for a few years.
Yes.
Actually, well, before we get onto that, you raise a really interesting point before we started recording, Emilie, which is the visa situation. Yeah. What are the visa parameters for buying, and how did you navigate that?
Yeah. So I always have goals and I go for it. I work hard for my goals. So as soon as I came, I there was one plan, and it was to get a permanent residency. And I became a permanent resident 4 months after I arrived here. So I applied for, I made myself eligible to apply for it within 2 months.
Which, look, going back
you
to
just insulted Emilie.
Look, I think it's we need to make it clear that it's because you came as an engineer.
Yes.
So not every migrant is able to do what you did. Yeah.
No.
So the usual time is multiple years.
So how long would it take for a podcast,
It took me
Emily?
9 years,
9 years
to get my permanent residency because I'm a journal, Like Australia don't need more journal, however, they do need engineers, doctors, nurses. It's a hard process, don't get me wrong, but I don't want to say you got lucky because you worked hard towards being an engineer, but you were at the right time.
Mossy, you
at
annoyed
the right
Emilie.
moment.
Oh my gosh.
No, so let me.
Jealousy.
No. I mean, I think it's important to point out that it's not kind of the normal processing time.
Yeah. So it goes way back for me because, generally a lot of Iranians want to migrate overseas. It's very common. And, ever since I was a teenager, I was thinking about this. So even when I chose what to study, I was thinking, what's the most migratable thing to study? Yeah. So I was, the option was between accounting and finance and engineering. I love numbers. But I probably would have, if I didn't want to migrate, I might have studied finance because I'm really interested in finance. But I did engineering just because I knew it's going to be an easier migration process.
That is funny because Australians have such a different perspective, right? And we have a big debate about HECS and help debt now, regarding, you're almost 18, 19 years old thinking about, well, what is my kind of ticket out of here? What's my ticket to a better life? And I think a lot of young Australians don't have that perspective. When I was 18, I didn't even know. I think I changed what I was studying like 3 or 4 times.
But I think you've got a good life here. That's why you don't think about moving somewhere else.
Yeah.
I mean, I'm a little bit like you. I always knew I wanted to go and live overseas. I thought I would stay in Europe, to be honest. But when the moment came and I had to learn English, I didn't want to go to the UK because of the weather. So I came here, fell in love with Australia, and then I decided to stay. So a little bit different.
Yeah.
But then it takes longer.
Look, even if it takes 9 years, I think we're all very lucky to be here.
Oh, definitely.
I've traveled to 40 countries. Yeah, and I can confidently say that Australia is top 3, of the ones I've been to, if not the best. I personally, I know a lot of people might not don't feel the same way, but I think the US is very interesting for me, and Netherlands was.
Oh, okay,
yeah.
Interesting.
Yeah.
Both beautiful countries.
Yeah. I do think that here in Australia, as immigrants, we've got so much more opportunities, and people give you a chance. And look, if I compare to France, for example, in France, you need to have a master's degree plus 4 or 5 years experience to get an entry-level job. While here, if you have enough to show that you're motivated, that you want to grow and you want to learn, people will give you a chance, even if it takes you 1 year to get the job in your field.
Liam Garman, Emilie Lauer, and Mossy Taheri, founder and principal at Rising Returns. Mate, what does your portfolio look like at the moment?
Yeah, so I bought 2 more after that. So in 2021, I bought in Adelaide.
Another great
Yeah.
We're gonna
He knows his number.
We're gonna have to start working out how you're doing your numbers. Yeah.
Look, I can talk hours and hours about that. But the data was telling me a lot of good things about Adelaide, and just the numbers were speaking to me. I was listening to them. And so 2021 in Adelaide, and then 2022 I bought in Perth. And so that's the 4. And right now I'm pre-approved and ready to buy the next one.
Okay.
Yeah.
I think everyone wants to know where.
Where?
Yeah. Okay, I will say that it's in Victoria.
I told you.
Okay,
I
there we
told
go.
you.
Okay, so
Yeah.
a lot of our listeners, they might be perking up. Is it time to move into the Victoria market? What are your thoughts?
I think yes. Yes.
And what-
It's,
Why?
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 it's the imagine anyone would agree that Melbourne is. I'll start with Melbourne and then talk about Victoria. Melbourne is the second best city in Australia. I mean, Melburnians think they're the first, right?
Yeah.
But everyone else would agree it's not third.
Yeah.
It's second. But the prices are third cheapest. So it's only more expensive than Hobart and Darwin. So in terms of capital cities, so second best city, but the prices are third cheapest. Right. So this just it's yelling out opportunity.
Yeah.
Just that fact. So very affordable. There's good numbers. You can get good rental return, and I think the economy is good. Yeah, overall a lot of positives.
Do you, because a lot of investors at the moment are worried about a lot of out-of-pocket expenses, including land tax in Victoria. And I don't know, I might even answer my own question here, because it's something that I've been dwelling on, and it's a case that if you look in other states and like that kind of arbitrage principle of, okay, everyone's seeing easy returns in maybe the outer suburbs of Perth or Adelaide or Brisbane before that, and your capital's kind of going from city to city to find the next cheapest or the next best yield or the next best this. So naturally, when capital flows from city to city, picking up those pennies, right, and that arbitrage principle, there's going to come a point at which it has to kind of go back to the start, which is, the next cheapest capital city, which is Melbourne. So maybe it's a case that your land tax relative to the returns you're getting is worth it.
Yeah.
What would you say to investors that might be worried about going into the Melbourne market?
Yeah, I get this question a lot. And again, if you look at the amount, so before we purchase, you have to look at what it's going to cost you to hold. So you got to see what that land tax amount is going to be. In a lot of cases, it's around that $1,000 mark. So if you were to buy in Perth, Adelaide, Brisbane, wherever, these types of properties that are, let's say, $600,000-$700,000 would have no land tax. So your land tax would be zero. In Melbourne, it would be around that $1,000 mark. So you have to consider that it's just $1,000 extra. It's quite an insignificant number. So the media, sometimes you read an article, the headline is, investors are fleeing Melbourne because of land tax. I would say, are they fleeing because of $1,000 per year? It's quite insignificant. It doesn't matter to us. Yeah.
Do you think it's full circle for you because you started your investment journey living down in Melbourne and you couldn't buy there, and now you're going to buy your property there? So do you think you're coming full circle in a way?
catharsis,
Yeah. I was telling my mom because, I tell her about my journey, and I was living in Melbourne and I bought in Brisbane. Now I live in Sydney and I'm buying in Melbourne. It's just about letting the data decide where the money goes. Yeah.
Are you ever considering buying here in Sydney?
No, not really. I think there's good opportunity in Sydney in the luxury market. I'm not in the position to be able to do anything like that. Yeah.
Yeah, I think that's pretty reasonable, and we've done podcasts here, and I don't know if you've got the quick maths on your head, you can break it down as well, but where you break down buying in other capitals, especially the smaller capitals, and you break down the rental yields on that and where your money can go versus buying an owner occupier here, and your money just works. Even with Sydney rent, your money just works better in other cities. Yeah.
Rent is relative to buying. Renting in Sydney is very affordable. So the rental yield in Sydney is around that 3%. So it's a great market to rent.
Which is actually, like, that sentence is, mathematically, financially correct.
Yeah.
But I think a lot of young people, their minds would be blown with that statement.
Yeah.
But it is 100% correct. Like the flat next to mine was on the market for like 2 months for rent. And I'm doing like a back of envelope calculation. I'm like, oh my gosh, I know the value of the apartment. Yeah. And I'm like, that's all the rent that you're getting for it? It's mind-blowingly low. But yeah, the numbers don't lie.
Yeah, and especially if you look at really expensive homes, if you look at some luxury, like a house could be worth 20 million, but the rent on these are very low. And at some point, I was thinking of doing like a share house type thing, 4 or 5 people. If we all put in like $1,000 a week, we could have had a mansion, like an absolute mansion. It's crazy. Yeah.
And there'd be couples that will be paying that now. So a lot of people would be thinking, well, what makes your data-driven process different from other BAs?
Yeah, I think how I see it is data is like ingredients, and how you interpret the data is how you cook with that. So if you have, if you give the same ingredients to Gordon Ramsay and me, the outcomes will be widely different.
You'll put Gordon Ramsay to shame.
With now, everyone has access to the data if they go pursue it, if they go try to get it. The difference is how you cook it, how you interpret it. And over the years, I've developed my own recipe, and it seems to work quite well. And it's funny because I see, there's a lot of prominent figures in the industry. I see them talk, and some things I agree with them, some things I disagree with as well. And I have reasons to come to the conclusions that I have. Yeah, it's interesting.
Now, get the feeling you're closely guarding your data IP, so that's okay. I won't probe too much more. But one way I will fish an answer is, those industry influencers. What are they getting wrong?
Some of them are not getting anything wrong, but some of them say things that I don't necessarily agree with. It's there's so many examples, but no one is fully wrong, right? They would say, 10 things and one of them would be wrong, right?
Yep.
And in my opinion, at least. But in terms of data, I'll give you something. So one thing that's really important is affordability. And that's the price of homes relative to the income of the people there, right? So it doesn't mean cheaper is better, because some places are cheap, but the income of the people there are also very low.
Yes.
We just want that relative. If you, just that one thing should help a lot of investors.
And you can already understand that. Yeah. Well, firstly, you've got the benefits of any market downturn. They'll be able to buffer the market downturn. If supply is constrained and they have more money in their back pockets for rent increases, perhaps, if you don't get supply online. So that makes a lot of sense. And that is something that we haven't dived too deep into. So that makes a lot of sense. Any other data points that people should be keeping an eye out on?
Another thing I can say is data. You shouldn't look at it what it is today. You got to look at the story over time. A place, for example, you can look at rental yield, right, as an example. Rental yield in a suburb right now could be 5%, let's say, as an example. But you got to look at the trend. 6 months ago, it could have been 5.5. Now it's 5, right? So then you can predict that it's going down, right? Whereas another suburb, the rental yield could now be 3%, but it was 2.5% a year ago, right? So sometimes people look at the data and it looks great right now, but what they don't realize is it's heading towards getting worse.
Yes.
Right.
Yeah.
And I'm seeing a lot of that in some of the markets that unfortunately a lot of people are buying still. The data is trending the wrong way.
Yes. Yeah. And I think that would be quite common because again, that's the recipe example that you gave before. Everyone's got the same data, but you know, if you look back in that yearly comparison, then you get a more holistic picture rather than looking at today's data, because it could be trending down for all you know if you're an investor, and there's nothing wrong with it, but buying a house that you've not seen, it could really be as simple as, oh wow, I'm driving past fields and fields and fields of new builds coming off the plan right now. Oh, that might impact rent. That might impact affordability of houses going forward, just with so much new supply coming on board. And now that's just an example. You don't even need to be there. You just got to do your research to understand what the long-term changes of the area will be.
It's just good. Sometimes just have a look on Google Maps. It's a great tool. If it's in the outskirts and not super desirable, with a lot of new builds coming up, it's it doesn't pass my requirements.
And that's sorry.
Yeah, I was going to say, look, yes, everyone has access to the data, but being able to compile the data and analyze it, it's also different. It requires a couple of skills, yeah? Do you have any tips for our investors listening to us, and even, I would say, like younger investors that are starting their portfolio journey, to not get lost with all of that data?
Yeah, I would say the advice I can give is there is an abundance of data. There's a lot of data points, right? And you will never have 100%, you'll never be 100% clear on any decision on investing. You got to make it work with what you have. Find 5 data points that you think are important, and you can make a decision just with that. A lot of people go into analysis paralysis. You will never be able to have all of it, right? So find what's the most important. So each data point, you can put weights to it, right? Let's say, and it depends on how you look at it, but you could say, the supply and demand on, as an example, how important is days on market to you, right? Choose 5 of these metrics and make your decision just based on that. Yeah.
The analysis paralysis is a very good point. Liam Garman, Emilie Lauer, joined by Mossy Taheri, founder and principal at Rising Returns. So you're an engineer, you're scaling your portfolio, and at some point you thought to yourself, I love this so much, I need more of it.
Exactly. Yeah. So when I realized, we all have an imposter syndrome, right? I used to watch people who sit here, and, I never thought I'd be sitting somewhere like this. But when I had concrete evidence that the properties I bought for myself were outperforming the marketing material of top buyers agents, and marketing is slightly exaggerated.
The cream of the crop, right?
Yeah.
You pick the 1 out of 50 that was the best. Yeah.
Yeah, it's marketing's that they put the best ones in their marketing material, and I realized every single one that I bought outperformed the marketing material. And I had friends, because back then people would ask me, they're looking for a buyer's agent, and I would say, look, I've listened to this guy, try it out. So I probably sent 5-6 of my friends to 5-6 different buyer's agents that were quite a prominent voice. Yeah. So I saw what they bought, right? And I also saw their marketing material. And, I'm big on research and figuring things out. There's ways you can actually see what people are buying. It's possible to figure it out. anyway, so when I found out that my properties were doing really, really well, and I'm really interested in this, I'm passionate about it, that's when I decided to turn it into a business.
Yeah, nice. And so what were your first steps like? What was the first couple of months like as a BA? How was that?
Yeah, very interesting. So it was my friends, talking to my friends, and one of them wanted to buy. And I was like, look, this is what I'm doing. And he knew about my portfolio. And I mean, the fact that he didn't even want to buy property, he listened to my story and then was like, yeah, okay, I need to do this. He was investing in stocks before that. Yeah, so that was my first client. Very, very good buy. We bought it, I think, 480, and it's. I was talking to him a couple of weeks ago. 480 in Perth in 2022, and it's now 800.
Oh wow!
Yeah.
Doubled, yeah.
In like less than 3 years. It's ridiculous.
Insane.
It's ridiculous.
That's
insane. Oh, wow.
Yeah.
So on that note, so you bought Perth quite literally at that boom time.
Yeah.
Right. But Perth sat stagnant for before that 10 years with such little growth. How could you say, and this is where it gets very complicated when you're providing that, not financial advice, but you're saying hand on heart to your close friends, you're trusting me with several $100,000 and maybe 30 years of liabilities with this mortgage. How could you say to them, hand on heart, I believe that Perth is the right place to go after having kind of stayed stagnant for 14 years? How did you come to that decision?
Yeah, it's tough. It was tough. And every property I've bought for my portfolio and then later for clients, it's usually in a place where most people say, don't go there, right? So I'm used to it by this point. Brisbane in 2018, you could give someone for free and they wouldn't take it. It was the sentiment was against it. But yeah,
Brisbane's a nice place,
yeah. As for investors, because it was also stagnant for such a long time. And Perth is a beautiful place, by the way. But yeah, I showed him the numbers. It was cash flowing really well. There was a few other people that were talking about it. We were early, but there was still other. So that was that was reassuring, basically, that, some other people that are popular were talking about Perth as well at the time. And then we got it done. Yeah.
Well, you'd always have that, and this is where we're kind of talking about that arbitrage before. You'll have sucking up those low-hanging fruits with investors going from market to market. The affordability aspect, the rental yield aspect, if you're finding a property that does have a good yield, you would expect then that there would be investors in markets where perhaps they've realized their capital gains. Perhaps they realize that for that place in Aspley, I could now buy 2 or 3 positively cash flow places in an outer suburban area. These factors follow. Sometimes these factors follow the good yield, which gives confidence to investors that, what might not necessarily be that blue chip suburb right this second might yield some really good results in 2 to 3 years.
Yeah. At the time, it was $400,000. Yeah. The one I bought, 10 minutes from the beach.
It's always a good indicator.
Yeah. Like you just got to put 2 and 2 together.
Yeah.
10 minutes so the median income in Perth is higher than Sydney. So it's like, okay, these people get paid more than us here. It's a 4-bedroom house, 10 minutes by the beach, 400,000. Like,
yeah.
Look,
no-brainer.
Don't overthink it. Like if it's like too good to, it almost was too good to be true. But and that's what goes back to the point when I say find a few data points, right? It's like one of those data points is how much land are you getting for how much you're paying, right? So if you buy a high-rise apartment in Sydney at the time, you couldn't even buy one for $400K, but let's say you could, you might have got 3 meters of land. So these things, they paint a picture, and it makes it very easy to make a decision.
Yeah.
We're talking about properties you bought like a couple of years ago, like the first one being 2018. Since then, the market, especially now, it's very high. The prices are high. Can you still make those good purchases today?
Very good question. And yes, there's plenty of opportunity that people don't know about. And yes, there's just amazing opportunity. So go look at affordability. You'll find some areas. Regional Victoria, don't underestimate it. It's regional Victoria. Like it's a nice place. And it's very, very affordable.
Okay, good. That's a hot
Good.
tip.
It's got hot.
Now,
Yeah.
to close off for today, what other hot tips do you have for investors on the market right now? Where do you think we're heading more broadly? What's the world according to Mossy?
Yeah, that's a good question. I think in property, there's always opportunity. I think as a macro level, as a country, I think property growth this year will not be as high as, past few years. And it may not be as high as the past few years for a while before we have a big boom. But certain areas, so it's now it's a lot more important to choose the asset and the location more wisely. But again, there's good opportunities right now even. So I can confidently say some of the properties we're buying now will do over 10% in the next 12 months.
Wow.
Yeah.
So, and on that note, there is consideration that a lot of people might be putting the brakes on because they expect that the property market won't continue to grow at the same rate. What would you say to those investors?
Yeah, the rate will not be as fast. And that's the cyclical nature of any market. You can't have it growing at 20% plus every year. So it's going to be slower in the next few years. But again, the places with the right opportunity, it's still going to be double-digit growth. So, considering leverage, you put 10% on a property, you could, or 20%. So if you put 100K and you buy a property for 500K, and that goes up 10%, that's 50,000. Return on your initial investment is 50%.
Yeah.
So, so I think that's
you're not getting that on the stock market.
No, you're not.
Yeah,
you're not. So I think it's I'm buying properties. My clients are buying.
And that's the consideration, right? Because your capital gain is also on the debt that you've accrued. So if you're putting down, say, that 100K for a 500K property, and then it goes up 10%, you're not, if you were comparing it to the stock market, if you had a similar return of 10%, you put down 100K and then you get 10 grand back. And you're still liable to all the same capital gains taxes and everything, and transaction costs on the process of brokerage fees, etc. What you don't factor in is your capital gain also includes the debt that you've got for that purchase.
Very good question. Very good input there. So because the types of properties we buy, most of the debt servicing, repayments on the loan, most of it is covered by the rental income. So at this point, we always bought cash flow positive until, recently it's very hard. Hopefully the interest rates go down and we will be happy again with cash flow positive. And I think that's likely to happen. But in the meantime, this year where we can get cash flow positive, we can be very close to it. So basically it's those two things can cancel out, the servicing of the debt with the rental income. So then we just take the capital growth.
Absolutely.
Yeah.
Anything from yourself, Emilie?
I'm quite curious because you're buying your next property in Melbourne. Are you ever considering buying a owner-occupier property for yourself?
No. My lifestyle, I'm huge on freedom, and I don't like to be limited to a location. every now and then, sometimes I go overseas and I work remotely for a month, usually 1 month a year. You'll find me in Bali or Thailand, and I'm working remotely, and having the flexibility to move anywhere I want. Even the places that I rent are always fully furnished, by the way.
Oh, wow.
Like, I just don't want to be even bound to a nice mattress that I bought, and now I'm like, how I don't want to move because I don't want to move. Yeah. It's a funny thing amongst my group of mates. They're like, you can't commit to even a fridge.
Fridge. And they're getting pretty cheap nowadays as well, So.
Look, a good mattress is so important. I love my mattress.
No, it is.
So
it is. But I like to be able to move freely, and if I have to move houses or go overseas for a bit. So for my lifestyle, I think for many more years, until I have kids, I don't think I'm going to buy an owner-occupier. Even if I have kids, actually, I probably wouldn't.
But you might change your mind then.
Yeah.
I might.
You might.
Never say never.
Maybe not.
Never
Look,
say
that is
never.
all we have time for today. Thank you so much for joining us on the podcast, Mossy.
Thank you very much.
That was Mossy Taheri, founder and principal at Rising Returns. And that is all we have time for today on the Smart Property Investment Show. But until next time, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.